Hi everyone, welcome to my YouTube channel Learn Commerce with Namita. I am Namita Mane. In today's session, let us discuss some important MCQs on topic Negotiable Instrument Act 1881. This is my second video on MCQs. In the last video, I have discussed some important MCQs on banking and finance, some general important MCQs. So let's see the MCQs on Negotiable Instrument Act 1881, and these MCQs will be helpful for students who are preparing for upcoming university examination and plus who are preparing for a banking examination. So let's see the MCQs on this topic. So the first MCQ, first question. The Negotiable Instrument Act 1881 defined and amended the law relating to dash. We'll see the option. Option A is promissory note, B is bills of exchange, C is check, or D all of the above. So Negotiable Instrument Act 1881 defines and amends the rules relating to which instrument. Is it promissory note, is it bill of exchange, or check, or all the three options? So let's see the correct answer. So the correct answer is option D, all of the above. So negotiable instrument is what? A transferable document from, and negotiable instrument includes promissory note, bills of exchange, and check. Okay, so all of the above defines the and amend the law relating to all this document. So we'll see the next question. A negotiable instrument means a promissory note, bill of exchange, or check payable either dash. So we'll see the option. Option A, to order, B, to bearer, C, A or B means both, to order or to bearer. Option D, A and B means to order and to bearer. So Negotiable Instrument Act is defined it, okay, as per section 13 of the act, that negotiable instrument means a promissory note, bill of exchange, or check payable either dash, either to order or bearer, or only to order or only to bearer, or to order and to bearer. So let's see the correct answer. So the correct answer is option C, both A and B, but C in between what is there? Or. In option D it is and. Option A is only to order, okay, means single to order, either to order, and B means payable either to bearer. But the correct definition is what? A negotiable instrument means a promissory note, bill of exchange, or check payable either to order means to order or to bearer, okay, means both. A as well as B is the correct answer, but see the between to order and to bearer is what? Or. Okay, so whenever you are writing the definition, or you are writing some, or you are giving MCQs exam also, please make sure that you are reading the question carefully and see if this question comes. So that means you have to give the answer to order or to bearer. Okay, so we'll move to the question number 3. Question number 3 is, a bill of exchange must contain dash order to pay money only. So let's see the option. Is it a conditional? Option B is an unconditional order, or option C is a contingent condition, and D is an implied order. Okay, so a bill of exchange must contain dash order to pay money only. Is it option A, B, C, D? You can give your answer in the live chat box. So we'll see the correct answer. The correct answer is option B, an unconditional order. So bill of exchange must contain an unconditional order to pay money only. All the all the negotiable instrument, whether it is a promissory note, if it is a bills of exchange or check, all these instruments contains unconditional order to pay the money. Okay, it does not, negotiable instrument does not contain any condition. So unconditional order is the correct answer. Next, fourth question. The money payable on any negotiable instrument must be dash. Okay, so the money payable on any negotiable instrument must be dash. So let's see the option. Option A must be certain. Option B must not be certain. Option C usually uncertain. And D conditional. So money whichever is payable on any instrument, on any negotiable instrument, it should be what? Either option A, B, C, D. Choose the correct option and mention in the live chat box. We'll see the correct answer. The correct answer is must be certain. So money payable on negotiable instrument must be certain, means it should have some certain amount. Okay, it should not be like uncertain. Okay, 5,000 rupees pay half and remaining 5,000 pay after 2 years. No, nothing. It should be like that. It should be the money payable on any negotiable instrument must be certain. It should have some value. So option A is the correct answer. Question number 5. What is the process by which a negotiable instrument is transferred to any person so as to constitute such person the holder is called as what? So we'll see the option. Is it called negotiation? Is it called negotiate? Option C is transfer, and D means all of the above. Okay. So what is the process by which a negotiable instrument is transferred from one person to another person so as to constitute that person as the holder of the instrument? So we'll see the correct answer. The correct answer is negotiation. Okay, so negotiation is the process by which the negotiable instrument is transferred to any person and that person constitute the holder of the instrument. So the negotiation is the correct answer. Option A is the correct answer. Okay, so we'll move to the next question. A negotiable instrument is dishonored dash. Options are on payment, on acceptance or endorsement, or option D, both A and B. Okay, so negotiable instrument is dishonored by which process? Either by payment or on acceptance or endorsement, or both A and B, means both payment as well as acceptance. So we'll see the correct answer. The correct answer is option D, both of A and B. So negotiable instrument is dishonored on payment and on acceptance. In both the cases, the negotiable instrument can be dishonored. Question number 7. The dash of promissory note has been given in section dash. So what is given about promissory note in which section? Okay, so the options are scope. Option A is what? Scope. and comma 2. B is definition and 4. C is role 3. D is function and 5. So the dash of promissory note has been given in the section dash. What is given in the section? Whatever will be the section of the promissory note. So the correct answer is definition. So the definition of promissory note has been given in section 4. Okay, so definition is given in the section 4 of the Negotiable Instrument Act 1881. So B is the correct answer. Next question. Features of negotiable instrument are. So let's see the option. Option A is a written and signed. B recovery. C freely transferable, and option D all of the above. So the features of negotiable instrument are, we'll see the correct answer. So the correct answer is all of the above. So negotiable instrument is in writing, it is signed, it is duly signed, as well as it can be recovered, and it is freely transferable from one person to another person. So all these features are of negotiable instrument. So option D is the correct answer. So let's move to the question number 9. Question number 9 is, which of the following is not a negotiable instrument? Okay, till now you have understood that. I'm sure you will get this answer correct, because till now you have understood the what are negotiable instrument. So still we'll see the option. Option A, bill of exchange and check. Option B, postal order and currency note. Option C is promissory note and check. Option D is promissory note and bill of exchange. So without wasting time, so the correct answer is option B. Postal order and currency note are not negotiable instrument. Bill of exchange, check and promissory note are postal order and currency note are not negotiable instrument. Bill of exchange, check, promissory note are negotiable instrument. So currency note and postal orders are not a negotiable instrument. So the correct answer is option B. Question number 10. In India, Negotiable Instrument Act came into force in the year dash, means in which year Negotiable Instrument Act came into force. So we'll see the option. Option A 1861, option B 1881, option C 1871, option D 1981. So the correct answer is option B 1881. Okay, so Negotiable Instrument Act came into force in the year 1881. So remember the year, in which year the act was enforced. Question number 11, match the following. So this is a tricky question. Let's see how many students gives the correct answer. Match the following. So match negotiable instrument, promissory note, bill of exchange and check with this sections. Okay, so we'll see the option. Is it option A, B, C or D? So I'll give you a hint that this sections, okay, whatever is there in this column, it means that this negotiable instrument has been defined in Negotiable Instrument Act 1881 under which section? Think and give the answer. Is it option A, B, C or D? Okay, so A is given here. Is it A, section 4? Okay, we'll go by one option. Option A is saying this. A is what? 4th, B is 3 and C is 1 and D is what? 2. Is it option A or option B or option C? Do not check like this. This is wrong. This way go. This way identify. Now I'll share the answer with you. So the correct answer is option C. Okay. Option C is the correct answer. Negotiable instrument is defined under section 13 of the Act. Okay. So A 3, B is 1, that means promissory note. As per section 4, promissory note is defined. Bill of exchange is 4. Bill of exchange. Section 5 of the Act defines bill of exchange. Check is 2. So check is defined under section 6 of the Act. Okay. So 3, 1, 4 and 2 is the correct answer. We'll move to the next question. Question number 12. Again match the following. So match the following. We'll see the option. Match the pair. Option A, option B or option C. Or option D. Grace days means what? Promissory note means what? Bill of exchange and holder in due course. So is it option A, B, C, D? So we'll see the correct answer. Correct answer is option B. Grace days means 3 days, means 4. Okay. Grace days means 3 days. Promissory note is what? Unconditional undertaking. Promissory note is, there is difference between promissory note and bill of exchange. Promissory note is an unconditional undertaking to pay, and bill of exchange is what? An order, an unconditional order, okay, directing to someone to pay the money. So C is what? Unconditional order. And holder in due course, section 9 of the Act defines holder in due course. So this is the correct option. Correct answer. Correct option is B. 4, 3, 2, 1. So we'll move to the next question. Question number 13. How many total sections are there in the Negotiable Instrument Act? So how many sections are there in the Negotiable Instrument Act? So we'll see the option. 147, 150. Option C is 143. Option D is 138. So we'll see the correct answer. The correct answer is option A. There are 147 sections in Negotiable Instrument Act. Okay, so there are 147. Remember this number, 147 sections are there, and under each section there are various definitions which are given as per the Act. Question number 14. The Negotiable Instrument Amendment Bill, okay, 2017 inserted a provision allowing a court, okay, allowing a court trying an offense related to check bouncing to direct the drawer. And who is drawer? The person who writes the check to pay interim compensation to the complaint. The interim compensation will not exceed -% of the check amount. So in the Negotiable Instrument Act has been amended in 2017, and there has been one provision included in the bill of 2017, that if the check is bounced, so there is a direction which is given to the drawer to pay the certain compensation. Okay, so that compensation should be how much percent? Well, it should not exceed a certain percentage of the amount. So we'll see the option. Is it 15% or 25%? Option A is 15%, option B is 25%, option C is 13%, option D is 20%. So let's see the correct answer. The correct answer is option D, 20%. So 20% means the interim compensation will not exceed 20% of the check amount. So the correct answer is option D, 20%. So last question. Dishonor of instrument. Okay, dishonor of negotiable instrument by non-payment is covered under section in the Negotiable Instrument Act 1881. Okay, it is 1881. Sorry, by mistakenly I have typed 1882. So dishonor of negotiable instrument by non-payment. If the negotiable instrument has been dishonored due to non-payment of the particular instrument, so under which section it is covered in the act? So we'll see the option. Is it option A, section 90, option B, section 91, option C, 92, option D, section 93? So we'll see the correct answer. The correct answer is section 92. Okay, so the correct answer is option C. Section 92 covers dishonor of bill of exchange by non-payment. Okay, so non-payment is what? When the maker of the instrument, whether it is a promissory note or acceptor of the bill or drawee of the check, if they make the default in the payment, then it is called dishonor. Okay, so this dishonor of negotiable instrument by non-payment is covered under section 92 as per the Negotiable Instrument Act 1881. So this is the last MCQ of today's session. Thank you. Please subscribe my YouTube channel if you have liked my video. If you have understood my video, do like my video and share the video with your friends, and do not forget to press the bell icon to get the latest notification. Thank you very much. We'll see you in the next session.